The Forex market is still very sideways, but the dollar versus the Swiss franc is starting to look very interesting. And I'm going to have all the details in today's video. Plus, this video is going to be a little bit different. We're going to run through all the details, but it's going to be less formal than before. I'm going to do less editing. So literally just me talking to you guys about these markets. We're going to run through all the different scenarios and key levels to watch. But I promise you, this market is starting to look very interesting, so you're not going to want to miss this video. By the way, let me know in the comments too what you think of this new video format. Do you love it? Do you hate it? Let me know in the comments, and don't forget to like this video as well. So looking at the dollar versus the Swiss franc on the weekly time frame, we've talked about this last weekend and really over the past few weeks, but the market right now is holding above this low from back here. Okay, so this low right now is serving as key support here for this pair. You can see resistance before. It has flipped to support here in the last couple of weeks. So the key for this market right now is finding support down here, but finding resistance up here in this area, as well as 84, these lows back here, 0.84. So we've talked about all this in past videos, and for the most part, the market still remains very sideways. And that's the case for most of the Forex market right now. All the major currency pairs are still very sideways. So we don't have resolution just yet. I want to be very clear about that anything I talk about today, we have to take with a grain of salt, because we don't yet have confirmation one way or the other. Now, let's dive in here to the 4-hour time frame, and you're going to see what happened here in the last 24 hours. So we had this weekend gap back here around 83.15, and that was filled here over the past 24 hours. It came close yesterday, but didn't quite fill it, and today we did see that fill. Okay, so as of right now, in my opinion, I think that this pair, the USDCHF, is sitting at a place that is kind of a must-hold for bulls. And I'm going to show you why here in a second. But if we look here at these highs over here, you can see that this was resistance through here. And we got the breakout above, weekend gap down here. That's been filled. So really, in my opinion, the market is sitting right there at a critical spot where it's going to have to make a decision. Either we get the breakdown below 83, or we get the breakout, above back here toward 84, 84.75, etc. Now, there are a few scenarios here to keep in mind, as well as a few patterns to watch over the coming days. And by the way, guys, at any time in this video, if you're finding this helpful, be sure to subscribe to the channel, because I'm putting out videos like this every single week. We also have trading lessons coming. So I'm talking about, falling wedges, rising wedges, head and shoulders patterns, bull flags, etc., all throughout the week here on this channel. So be sure to subscribe. So looking at these lows down here, if I take the magnet tool here in TradingView, which I love because it does help tremendously with snapping levels to highs and lows and closing prices as well. You can see that off of this low back here in April, if we draw a trend line across these two lows, you can see where the market is. Again, this is what I mean by, right now the dollar franc is sitting at a place that really is a must hold for bulls. Now, here's the thing I love to do with trend lines, and this is a little tip for you guys, is instead of just drawing a trend line, in most cases, what you can do is you can turn this into a channel, because markets love symmetry. And I talk about this all the time, but what you'll notice here is that same trend line across these lows. If we do the same thing and turn this into a channel instead, what you're going to notice is that we have a perfect ascending channel. Okay, so you can do this a lot with markets, because again, they love symmetry, meaning that if you get a move off of the low like this, chances are you're going to get an equal move over here. Okay, once the market retraces down here into this area, which this was probably about a 50% retrace from the highs, then you do get an equal move higher into this symmetry, right? Into this parallel channel. So with this being a channel instead of just a trend line, it gives us a lot more structure to the chart, meaning that if we do get that bullish move above areas like this up here, right? These highs, if we get a bullish move, and I'm going to show you what the trigger would be here in a second. If we do get that bullish move off of these lows, then pretty much what your final target could be, right? The top of this channel up here. So not guaranteed, but definitely something to watch here over the coming weeks. Now, what this pair is going to have to do to break out to the upside is going to be, first of all, we need to see higher highs, right? We've seen lower highs and lower lows for the past, week or so. In fact, just over a week, going back here toward May 12th was the high. So what we need to see is the market start to break out. Now, specifically, if we take a trend line here on the 4-hour time frame off of this high up here and drag it lower, what you can see is that we have this descending trend line here off of these highs. Okay, so this is what the market is going to have to break above in order to turn bullish. Now, the one reason why, or another reason why this is starting to look a little bit more bullish for the dollar franc is because we have the market holding above these lows back here, or these previous highs, right around 83. And we also have, if you look here on the 4-hour time frame, we have this pattern here, okay, potentially a falling wedge off of some of these lows. So if I draw this out, this is what it looks like. We've got these highs back here. Okay, so we got these 3 highs. We also have lows through here. Now, this is the 4-hour time frame, okay? And what you can see is that this down here is the bottom of that channel that we just looked at. So you can see how the market is kind of getting squeezed here a little bit into this falling wedge to the point where it's going to have to make a decision over here over the next, I would say, really 24 to 48 hours. Okay, so this is obviously, it goes without saying, it's going to have to break higher or lower. So let's talk through those scenarios. So if we get the dollar franc breaking lower, let's talk about that first, because even though the market is holding above these highs from back here, and even though it's been trending higher for the past few weeks, and also forming this potential falling wedge, right? For all intents and purposes, it does look relatively bullish. However, we have to entertain both scenarios because, again, markets are very sideways. We don't have resolution just yet. So as of right now, if we get a break below here, okay, now it has to be below. You don't want to be shorting this into 83.15 because, again, you've got the bottom of this channel here, right? So if I move this out, you've got the bottom of this channel down here that comes in just below that, okay? So right around 83. So in my opinion, this is going to be the invalidation for any bullish scenario. If we see this market start to trade below here on the high time frames, then that would represent a breakdown of this channel, and it could open up lows like this down here around 82 or so, okay, just below 82. So that would be the first target, and then you've got this low down here. So that would be the bearish scenario here for the dollar franc, and again, 83 is going to be really your invalidation for the bullish scenario, okay? So said differently, 83, any kind of break below this level down here would be a bullish invalidation. It could also be a bearish trigger for that move down here toward the lows. Okay, so we've talked about the bearish scenario, and we know what the invalidation is now for bulls. Let's talk about the bullish scenario. So here on the 4-hour time frame, again, we have that falling wedge. We've talked about this, just a few minutes ago, and you've got this confluence of support down here. So those are the bullish factors going for this market, right? It is coiling within a short-term uptrend, and we also have this falling wedge, okay? So if we get the break above this trend line over here, so that's going to be step one. We need to see this market get above this area up here, right? Break above here on the high time frames, get above these recent highs, you're looking at 84, okay? Now, this is going to be a big test because looking at the weekly time frame, right? Keep this in mind that when you look at multiple time frames here, yes, the 4-hour is forming a falling wedge, but these lows right back here, you've got this low down here that we talked about. This is currently support. Okay, so we're good there. The market has reclaimed that. However, 84 is the location of these lows back here on the weekly. So far, we have not seen a reclaim of 84. Okay, so that is going to be critical going into this week's close. If we see this pair get above here on the weekly time frame, that would secure a much larger sell side fake out, meaning that we're looking at, in my opinion, probably a move back here toward the lows, which this up here is the mid-range of this much larger range for this pair, okay? So that's going to be critical going into the weekly close. So a few things to keep in mind here as we move through the week. So heading back here to the 4-hour time frame, we have this descending trend line here that the market has to break above. That's going to be step one. And then, of course, you've got 84 up here. Now, 84 is more of a weekly level. That's why here on the 4-hour time frame, 84 doesn't really look all that significant, okay? But it is going to be significant going into the weekly close. Now, let's look at this price action back here. I'm going to go to the 8-hour time frame just to kind of show it a little bit more clearly. And you can see that we've got these lows back here. So when this pair broke down, what you can see is that this was a very aggressive breakdown, and we got a relatively shallow retrace into this area, meaning this candle right here. And if you look at these lows and you look at where this high is, there is a gap through here. And this gap where you got this very aggressive move lower followed by no retrace into that area, this is what's called an imbalance, or FVG, fair value gap is what a lot of people call it. I tend to call them imbalances. It's really essentially the same thing, but it's where you get this open liquidity that was left behind. So people trying to sell up here and those orders did not get filled. Now, Mr. Market, the goal of any market is to have as much liquidity in play as possible. So what that means is that this up here, this area up here, becomes a potential magnet for the market if we get the bullish trigger. Now, the trigger would again be the break above here and the weekly close above 84. If we get those two things, then we could be looking at a retest of the top of this channel up here somewhere to fill in this imbalance. Okay, so again, the goal of any market, right, is to have as much liquidity in play as possible. And you've got this open liquidity back here that was never put into play. All right, so this could become a magnet for the dollar franc if we get that bullish move above this trend line. All right, so it's still yet to be seen. We still have a lot of indecision out there for these markets. Now, let's take a look here at the DXY as well, because this is also going to matter. We've talked about this in the past, but you can see that down here, right, this was our descending channel right here. And we got the move below. We had the reclaim back here. This is what gave us that move back here toward this imbalance around 101.8, okay? So this reclaim over here, we talked about this at the time, and that was that bullish trigger for the move back toward 101.8. Now, what I've talked about recently, including in yesterday's pound video, was the fact that really right now the DXY is trading within this range back here. So you can see that these highs back here and these lows going back to 2024, this is the same range for the DXY currently, okay? So you've got 100.2 as support and you've got 101.8 as resistance. Now, this falling level, okay, this descending level over here as well, the top of this channel is also going to be a factor. So you've got the top of this channel here, right, which is also going to be critical for the DXY. And this is what I mean when I say that you've got to weigh out both scenarios. When you look at something like the dollar franc, don't just get ahead of yourself and think that the market is going to break out because it looks bullish. You have to go with what's on the chart. And what's on the chart right now for both the DXY and the dollar franc is indecision, okay? So as long as that is the case, you have to weigh out both scenarios. You can't just assume that you know what's going to happen next, because the truth is nobody does, okay? So right now you can see 100.2 still support here for this market. And this is why too, I said in yesterday's video with GBPUSD is that I would not want to be buying the pound or really, the euro, the pound, you name it, as long as the DXY is above this level, okay? Now it could fail. It could fail. The DXY could get back below here, in which case this becomes a failed breakout attempt, and then we're looking at a move back here toward the lows. But as of right now, again, this goes back to what I just said. We have to go with what's on the chart, not what we want to happen or what we think might happen. Right now, the chart is telling you that it is still above support, okay? So indecision here from the DXY. All right, so keep that in mind when you're looking at the dollar franc. I do think this market has potential, but the key word there is potential. Right now, we do not have a confirmed break here from this market. Okay, yes, it is holding above key support. Yes, it is coiling into a potential falling wedge here. And I also think that 83 is going to be kind of that must hold for bulls. I think this is your invalidation level for the bullish scenario. And if we get that, then we could see a move much higher here over the coming weeks, potentially back there toward that imbalance I talked about, up around 87.30 or so. Now, lastly, guys, keep in mind too that this affects things like the pound. If we do see the DXY break higher, the dollar franc break higher, then this scenario that we talked about yesterday with the pound could absolutely fail. Okay, I talked about this yesterday as well. We got a little bit of a breakout here from this market. If the market closes back below here within the next day or two, then this becomes a failed breakout attempt, and we're looking at that push lower. All right, still yet to be seen. Still a lot of indecision out there. But when you look at something like the dollar Swiss franc, guys, given everything here, regardless of which way this breaks, I do like the technicals here, and I do think it could produce an incredible opportunity over the next few days.